Hello, friends. Welcome to Nirmal Bang, and I am Piyush M. And today we are bringing to you a conversation around earnings. It's an earnings season. We actually are seeing very exciting earnings coming from the consumer space. We've also talked to a couple of FIs and DIs where actually they have been seeing the consumer discretionary space very positively. And today we are going to bring to you a consumer discretionary company. For the discussion on the earnings, now let me welcome Mr. Sudarshan Kasturi, Senior Vice President and CFO of Vigar Industries. Mr. Kasturi, welcome to the show.
Yeah, thank you. Thanks very much for having me on the call.
Let me start the discussion on the earnings here. My first question to you, sir. We saw the revenue growth numbers roughly around 1 to 2% growth. Southern markets have been slightly tough this time, which again forms a sort of larger proportion for you. Help us understand the revenue growth numbers geographically.
Yeah, the revenue growth, as you said, is just about 1.5%. But I think the big factor behind that is the base effect. The Q3 of last year was unusually high. You might recall there were some disruptions in the market in the first half of last year, so there was a spillover into Q3. It's a bit of an unusual base, so which is why the revenue growth is about 1.5%. But if we look at the last 3 years, the compounded growth rate is about 15, which is a fairly decent, I would say, from my point of view. Having said that, yes, we have seen a bit of a slowdown in consumer demand from, say, August, September onwards. So to some extent, yes, there has been some impact on the top line, but still a very satisfactory number.
Right, sir. So I was looking at the sort of segment split here, and what actually we were observing that this time largely we have tried to actually sell more sort of consumer durables. Was it a sort of conscious effort to destock the inventory because electronics, electricals, those have been largely stable. We have seen some growth in the electrical space. Help us understand from the sort of segmental perspective also.
Uh, yes, it is a conscious strategy to grow the durable segment. Among the three segments that we have, electronics, electrical, and durables, over the last 3 to 5 years, it's the durable segment which has been leading the growth strategy for us. And if we were to look at even the CAGR for the last 3 years, a significant amount of growth has come from the durable segment, where we sell fans, water heaters, air coolers, and kitchen appliances. So it's a conscious strategy to drive that segment to a larger scale.
I seen the segmental split here, and that split was telling me that consumer durables revenue has grown by 5% about. We have seen a degrowth in electronics segment. Electricals were largely stable. But within the consumer durables, it looks like there was a conscious effort of destocking. Please help us understand that.
No, nothing significant in our case. Um, you may be referring to destocking in fans, which some companies had to go through because of the energy rating norms coming into effect. It wasn't a significant factor for us though. It's the growth that we have got in consumer durables is just about normal sale, not related to any pipeline.
Right, sir. I asked you this question because what actually I observed was that when I actually saw the margins for consumer durables this time, consumer durables revenue actually grew by about 4.5% versus the last year, but the margins have gone into negative territory versus 2.8% last year. And this is why I was asking you that what was the issue in the consumer durable segment?
That's for different reasons, not a liquidation issue. There are two aspects to the consumer durables margins being low. One is there is a higher A&P spend this year compared to last year. That explains some portion of the drop. The other thing, the other factor is that with the significant amount of commodity cost increases which have happened in the last 15 months, there has been a pricing gap which has suppressed or shrunk margins over the last 3 4 quarters. That impact continued into the current quarter. It takes a while for the consumption costs to come down after the commodity prices stabilize. So we've been consuming out of higher cost inventory through Q3 as well. Mhm. So that's the reason margins are down. And I think over the next 1 or 2 quarters, we expect the margins to crawl back to crawl up to the pre-COVID.
Right, sir. So fair to assume that by about June quarter, we'll start seeing normalized margins.
Yes, yes, we should. I think over the next 1 or 2 quarters, the margins should normalize and come back to whatever the pre-COVID years.
My question to you, sir, is I've observed that depreciation and interest costs basically have moved up versus the last
Mhm.
year versus the last quarter.
Right.
Normally, in manufacturing companies, it happens when you set up a new plant and that plant actually has not done the complete asset sweating. So you actually see the disproportionate cost number first. So help our viewers understand what's happening there.
Yes, that is the case. We've been, increasing the share of in-house manufacturing over the last few years, and in the last 12 months specifically, there's been a new plant that has come up, which manufactures inverters and stabilizers. There's also been some significant expansion in the wires capacity. So those investments have gone in the last 12 months, and that reflects in the increased depreciation.
Right. And on the ad spending, there was slightly higher ad spending in the last quarter. Was it an effort to really push some particular brand or some category? And is it going to remain at a higher levels in the March quarter also, or we are slowly going to see some tapering?
No, the ad spending in the last 2 years, the two COVID years, were lower than usual. What you're seeing now is the normative levels. The ad spend in this quarter was about 2.7% of turnover, which is about the average level of spending that we try and maintain. It will remain at these levels. It's just that the last 2 years were low.
I want to talk about the sort of most focus now is the acquisition which you have made recently.
Mhm.
You are entering into a large market, and I think I was looking at the market possibility here. Very large consumption market, very large population, large. You
Mhm.
already have a large geographical penetration. So this Sunflame acquisition, which is giving you an entry into a kitchen appliance market, potentially is a 10,000 crore plus market. So help us
Yes.
understand what is the plan for that, how basically you're targeting in terms of expansion, and what actually we should be expecting there.
Yeah. The Sunflame acquisition is a very good strategic fit. And as we have mentioned before and in a few other places, there are many opportunities for synergy. It's a very exciting category. Sunflame is a very strong player. It's an iconic brand, has a good presence. There is a lot of complementarity to V-Guard, whether in terms of channel or geography or product. So we are very confident that the overall kitchen business will gain significant synergistic benefits from that.
Right, and the real synergy will start emerging like in 1 or 2 quarters, or you think the sort of distribution network will take time, about 3 or 4 quarters,
It
to really get
will,
all things together?
yeah. Now, it will take some time. We should not be too much in a hurry. There are we've just concluded the deal, and we need to put a management team in place. And the first step would be to simply run the business the way it is and start making some incremental improvements. Over a period, we will fully integrate that with we got systems and distribution network and so on. Uh, so we'll go about it, I think, in a calibrated way.
Yeah, I think recently in our conversation we are talking to FIs, and they actually were saying they're most bullish on consumer discretionary space, and
Yeah.
India is overtaking as the largest population in the world this year, and where you are positioned right now is the sweetest sort of spot here. So again, that is something positive for our viewers. Again, to really take note of the thing here. Coming back to the market, the core sort of space here: electrical, electronics, stabilizers, durables. We are heading into summer season. Broadly, how are you taking a look at the March and the June quarter? How's the consumer demand looking to you? Some industry players are talking about slowdown. Some industry players are talking about geographical disparity. How are you looking at the market right now?
We have also seen a little bit of a slowdown in the last couple of months. But I wouldn't say it's not a bad demand situation. It's about an average or a mediocre demand situation. There can be factors of weather. For example, we've just gone through the winter months, and sometimes a warm winter could mean uh, softer demand for certain products. Some of these tend to be seasonal. That's there. It could also be the result of heightened inflation in the last 10, in the last 10, 15 months. Many of our product prices have gone up significantly compared to historical price rises. So it must be having some impact. But having said that, we are entering summer months. The Q4 and Q1 are big months for us. It's a different mix that sells in these months. So we are hoping that we will have a good summer and we're getting ready for it.
Yes, and that's why I asked you this question. Traditionally stronger months. One of my last questions on a sort of a revenue where actually we are right now. We just talked about from a sort of margins and revenue. How's the sort of broader business looking to you, and which perhaps you think is looking much stronger right now versus electronics, electrical, durables, where actually you're looking as a stronger revenue engine for you right now?
Yeah. Like I mentioned before, our biggest growth engine is going to be from durables. Uh, Fans and water heaters are significant categories where we already have a good presence and we have seen growth coming in. You also mentioned some flame kitchen, which is the other focus area, so we have big plans there. So overall, durables will continue to drive growth for the company. Some work to be done in terms of getting the margins right, and so hopefully in the next 1 or 2 quarters we should be able to see the margins coming back. Mm. Other than that, there are a few other new categories we have entered, which is switch gears and modular switches. So in addition to durables, the focus will be on driving growth in those those new entries.
Okay, sir. So I think with that, I think we'll wish you all the luck for the coming quarters. We'll again connect with you in the next quarter, and also all the best wishes for the new acquisition and the integration.
Yes, thank you very much. Thanks for having me on the show.
And with that, dear viewers, that was We Got Interaction for you. It's a wrap on this show for now.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.